Hey guys, what's going on? We got Kevin over here again today. I want to talk about this whole thing going on with the Biden rule. You know, there is a lot of misunderstanding and misconception about this thing going on. So the thing was released that Biden is hitting the ones with good credit and higher down payment to subsidize for the low credit score FHA loans and things like that. Mm-hmm. So back in March, FHA and conventional both have something called mortgage insurance. Okay. FHA prior to March, mortgage insurance on FHA was 80% of the loan amount. Okay. In March, they decreased it to 55%. Okay, which helped a lot of people qualify now, right? So that was good. Plus, the rates are immaculate right now in FHA. But what happened was this new rule came out where people with higher down payment or are going to get hit. So the interest rate is not so much the factor here. You still get a better interest rate the better the credit score, right? It's the mortgage insurance, right? So I guess I don't know what the whole purpose is of this. I guess it's to help people to get into homes, which is another reason why you should purchase a home.
Yeah.
So it's not so much on the, if you do have great credit score, you worked for a reason for it. I know a lot of people are upset about this, but you still will get a good rate. However, what happens is the mortgage insurance that you will obtain on a conventional loan will be a little bit higher.
Okay.
And the way it's only going to be higher is if you're putting a higher down payment.
If you put a higher down payment.
Correct.
Okay.
And I think it has to do with like the U.S. Treasury and everything for people to not be so in a tight economic situation, right? So then you don't want to become house poor neither, right? So what happens is you'll see, I'm going to post that chart, okay, and it'll show you where it gets you affected mostly. For somebody between like a credit score of like a 680 to a 700, that's a level that you want to be at, okay? But always put the lower down payment, okay? Even if you have to go conventional. There are some cases where you do have to go conventional on a loan product depending on the type of property you choose. Now, the interest rate will not be such a huge factor. However, the mortgage insurance will.
Yeah.
So what I recommend a lot of people to say is, if you plan on saying that, hey, I'm going to put 20% down, don't go that route. Put the lower down payment at 5%, and that chart will show you how much of a difference it makes. If you put the 5% down payment, and then people are going to be like, well, wait, my monthly payment is going to be higher and things like that. Don't worry. Once you close on the loan after putting your down payment, you put the difference of the larger down payment towards your balance, your principal balance. Mm-hmm. And then you can do something called a recast on the loan. And a recast is just readjusting your principal balance. And that's where the pricing loan level price adjustment kicks in. So whatever portion that you put towards the principal balance after you close, they do something called a recast, and that will go ahead and lower the monthly payment and or probably potentially be able to remove that mortgage insurance.
Got it. Okay.
So I'll go ahead and talk about what a recast is, and we'll post a tip on it. Now, it's not so much of the rate. Oh my God, my rate's going to be a 7% just because I have better credit score. That's not fair. Yes, I know it's not fair. I know, I understand. But if you're looking to buy right now, go FHA. Okay. I have a client that I'm working with right now. She had to go on a conventional loan product. Then this Biden rule came out. Her rate was already locked in 2.5 weeks ago. So she didn't get affected by this at all. Okay. Now, she's stuck on the fact that now FHA is better. In her case, it's not that.
But she's already locked in.
She's already locked in, right? This does not take an effect until May 1st, which is a couple of days from now. But she's already locked in. But she's stuck on the fact that FHA is better. That's not typically the case sometimes. Conventional is not a bad loan. right now there are just price adjustments, and if you have the right loan officer, they'll be able to advise you what's best for them. Either put the lower down payment or go FHA or whatever the case may be. You know, there are different scenarios you have to go by. But the misconception is that, oh, my rate's going to be higher just because I have better credit score. No, rate is still factored in based on your credit score. It's just a mortgage insurance. The higher the down payment, the higher the mortgage insurance goes.
Why is that?
So I think what's happening is they want people to become more homeowners. I think that's my theory. And they want to make it affordable for other people who could not afford or couldn't be able to buy a home, and subsidize the conventional loans to accommodate for the FHA loans. And I think that's also to kind of not put us at an economic standpoint where people that do have the larger down payment, they don't want them to use all that money, in other words, too, you know, save it for a rainy day or whatever the case is. Fortunately, that's the case, and more information will come out as we go on with this and why this happened and what the case is. But who knows at this point, you know?
Yeah.
But it's still there. So you want to definitely speak to a loan officer, see what your options are. There are some cases where you might have to go conventional, like again, if you're purchasing a condominium, or I have a buyer that's purchasing right now a townhome, but it was an older townhome. So conventional was a little bit more lenient on the type of the structure of the home, you know, so she had to go conventional. But it's definitely not much of a hit on the rate. It's more of the mortgage insurance. You can get away with that, you know, put the lower down payment, or just get into an FHA loan, you know?
Yeah. Because, I mean, they tell you, you know, build your credit, build your credit, build your credit. Now it seems like people who built their credit are kind of getting screwed at the end.
Yeah. I've had a lot of people reach out. They're like, oh, my God, I worked so hard for my credit. And now this, you got to be kidding me. Well, calm down. It's okay. I know it's a lot of people are upset. I'm upset too, right? But it'll weigh itself out, you know. A lot of families, when they get into a mortgage, within 6 months to a year, they go ahead and refinance anyways. You know, when the rates drop, you can always refinance. You can remove your mortgage insurance, switch it over, whatever the case may be.
And this does not apply to FHA, this law?
No.
Okay.
No.
So that's why she is...
Correct. She's upset because she's stuck in a conventional loan, but she's still got a pretty decent rate based on today's rate factor, and she wants to go to an FHA. But regardless, they're both great loans. You know, it's not like she was putting a huge down payment. She was still putting down the minimum down payment required. She still got a pretty decent rate, and she has great credit score, but it's just an assumption that she has out there. And that's just probably to every consumer out there as well purchasing right now. Oh, FHA is a great loan. Yes, FHA is a great loan itself too, but conventional is not bad neither.
Yeah.
But you're only going to get hit a little bit with a higher down payment and things like that.
Is her mortgage insurance rate locked in as well?
Yeah.
When you lock in all your rates are locked in.
Yeah.
So with the new law, would her mortgage insurance be lower because she's putting the lesser down payment?
In her case, no.
Okay.
So the reason why in her case is right now everything's kind of screwed up right now, right?
Sounds like it.
Yeah, we're fucked. So right now, because the rates are so volatile, now she will get hit hard eventually because of it. All comes into factor: debt to income ratio, credit score, how much down payment, how much money assets do you have left over, things like that. In her case, because debt to income ratio may be tight, her mortgage insurance might be a little bit high.
Got it. Okay.
So all those things come into factor. But 9 out of 10 times, I love FHA loans, you know, all day for me. Yeah. I know my realtors don't like it, but I'm like, guys, you're going to start getting these FHA prequals, but FHA all day. But I'm here to just kind of inform you that it's not so much of a huge hit on the rate. It's just on the mortgage insurance. And that's why it's so important to speak to your loan officer or a mortgage representative for them to advise you what route to go, whether you put the higher down payment, the lower down payment, whatever the case may be. So definitely, if you're looking to buy, speak to a loan officer, see where your options are, and kind of go from there.
And the lowest down payment would be most beneficial right now.
Absolutely, yeah.
And like you said, you can always pay whatever remainder you're planning on paying towards the principal.
Yeah.
And then do the recast
of the loan or refinance. I have this one gentleman, he's buying a pre-construction. He wants to put 20% down, and then he wants to get into a 15-year mortgage. I'm like, listen, no, you don't need to. You don't want to put yourself into a 15-year mortgage, for one thing. And I always advise people, I'm like, don't put yourself in a 15-year mortgage, because if God forbid you don't have that money for a rainy day, you're not tied down to that payment, right? If you want to pay your loan off, that's fine. Get into a 30-year and treat it like a 15-year, right? Mm-hmm. But never put yourself into that position.
Just to give yourself some wiggle room.
Exactly. Because remember, in a 15-year, that's in half, right? It's your monthly payment's always going to be higher. So I ran some numbers. I ran some scenarios. His mortgage insurance would be higher. Actually, I'm sorry. His interest rate would be higher if he was to put 20% down, because on a conventional, after 20%, you don't have MI, versus him putting 10% down, having a little mortgage insurance, and having a bit of a point off on a rate. So it's kind of hard to say or determine what the scenario is or what exactly the number would be unless you have the scenario in front of you. But again, he sought my advice. I gave him his options, and then that's what works best for him. You know, later in the future, he could pay it off, whatever the case is, remove the mortgage insurance, whatever the case he might do.
So 20% or more of a down payment, and there's no mortgage insurance.
Correct. On a conventional loan, it's 20% down. You don't have mortgage insurance.
And that's still, even with the new law.
Correct.
Okay.
Correct.
So 19, what is the lowest percentage you could pay for a down payment?
For the minimum down payment as a primary homeowner on a conventional is 3% down payment.
Okay. So 3 to 19% is that.
Correct.
Range.
Is that range. Yeah. And again, his mortgage insurance on a 10% down payment is not going to be so high, because he falls within that category. The loan amount is pretty large, and it's not that high versus him putting a huge chunk and putting all his eggs in one basket, Right. Like, just hold on to that. Once you close on the loan, you can put in the portion of the difference to the principal balance and then recast your loan.
Okay.
Yeah.
Got it.
So I know it's kind of messed up, and there's a lot of misconceptions out there right now with this new law that came about, the Biden rule. As time goes on, there will be more information out there for what's going on, different scenarios. But if you're looking to buy, go ahead and give me a call. Click the link on my bio. Kevin, thank you again, always.
Thank you.
Yeah, I know. Looking for it. Hey, did you see Tatis play again? He's back on the field.
I know he's back. I didn't watch him yet.
He's my favorite baseball player. I like him.
He's Dominican, so.
I know. I know. Well, guys, thank you so much for joining us. Again, Kevin, thank you so much for always coming through. If you want more information, click the link on my bio. Give me a call. Send me a DM. And don't forget to subscribe to my YouTube channel. Have a good one.